Welcome to the Retirement Evolved podcast with certified financial fiduciary Adam Bruno.
And welcome back to the Retirement Evolved podcast. I am Adam Bruno from Evolution Retirement Services, Evolution Wealth Management, but it doesn't matter who I am. It matters who I have with me, my one and only, my ride or die co-host, Lauren Trolson.
Hello, everyone. Great Friday. I didn't have my coffee this morning, so I forgot to put the chip into the recording device for the first podcast we recorded.
So now we're re-recording, but folks, it's okay because Lauren's the best, and if that happened, that happened. It's just Friday, so
yeah.
What do you want to talk about today, Lauren?
Well, Adam, before we get into everything, I wanted to unpack some of our personal life, that we were talking about earlier today, and I thought maybe you could tell everybody about what's going on with Maverick.
Oh, yeah. Well, we've always had a clue that there might be something that's going on, but we had him evaluated. He's 4 now, so we had him evaluated, and he did get diagnosed with level 2 autism spectrum disorder. Now, before anybody thinks anything, I am actually pretty excited about this because I have 3 neurotypical kids. Well, my daughter is slightly on the spectrum. She's a level 1, so we found that out later on in life, and she's 20 now, so who cares about that? She's fine. But with Maverick, it was a bit of a shock. There was a lot of evaluations, a lot of testing, and we jumped on that right away. But I'm actually pretty excited about it. So. It's definitely a new challenge. We know that he's
going to have all the support he needs, and he's going to do amazing in life, no matter what. He's such a special kid.
He's very, very. He's verbal. He communicates what he wants. He's just got his own little world sometimes. I mean, that's just how you process information. So
absolutely.
But we should talk about the elephant in the room. Callie, I'm not talking about you. I'm talking about the fact that she has triplets on the way. But it is an elephant in the room because, we always dance around it a little bit here. But the fact is,
we don't know when it's coming, but it could be any day now, people. Any day. She could be popping out those 3 kids.
Oh, my gosh.
Family of 5, 4 girls. Well, four girls, 3 boys.
Right, and
family
it's actually
7.
2 of the kids the 2 of the triplets are identical twins, and then you have the one that's the fraternal twin. But the 2 identical twins are girls.
Yes.
So this poor kid, the rest of his life is going to have to, it's going to be tough. Twin sisters, I can't even imagine.
It's going to be great though, and we're all very excited. I'm especially excited. Aunt Lolo is in full effect.
We are. We're ecstatic about it, and. It's all well and good to do what we do every day, and everybody gets into a business to make money. But the way that we've been able to provide for our families here at the office, as far as our clients, and then that helps us provide for our other families at home. So no matter where we go, it's just so special because it always feels like family, and everybody knows exactly what's going on. And we had a nice little baby shower for Kurt because everybody insisted that he has a baby shower.
And it was so beautiful.
It was beautiful.
Thank you. Shout out to Valerie. You went above and beyond. Cece, thank you. Both of you did so much. And everyone that came, you guys, it made Kurt's,
Well, the best thing about it was watching Kurt sit on that chair and have to open presents.
It was amazing.
That was the best part of the shower. No, but seriously, we just wanted to send a shout out and say a big thank you to everybody who helped with that, especially Val and Selinia. It was great. Okay, so do you want to move on to business now?
Let's move on to business. Let's do that.
That's right.
Today, we're going to unpack some of the biggest tax changes we've seen in years. Congress just passed what's being called the One Big Beautiful Bill Act. And while the name may sound a little bit over the top, the implications for retirees and pre-retirees are anything but trivial.
And I think what we really need to start with is the most headline-grabbing piece, right? In the 2017 Trump-era tax cuts, which were originally set to expire, they've now been made permanent. So what that means is we can count on another couple of years of lower tax brackets, higher standard deduction, and they're here to stay for a while. So that's probably the biggest headlining grab out of all of that, don't you think, Lauren?
Absolutely, and this provides kind of a level of stability that many retirees crave. We always talk about mistakes being so costly in retirement, and this is just one more layer of stability that you can have in retirement. So you planned your income based on your current tax brackets. And now you can continue doing so without this like looming concern of a sudden shift upward, at least, for now in the short term.
And, let's go to the senior bonus deduction next. That was another kind of headline grabber. A lot of people want to know how that works. Starting in 2025, it's individuals age 65 and older. They may be eligible for an additional $6,000 deduction or $12,000 per couple. That's why it pays to be married in retirement, Lauren.
Mm-hmm.
The bonus deduction will be available through 2028. Of course, I only bring that up, Lauren, because, I'm worried that you're going to be retired before you get married. So
is that what you're worried about?
That's what I'm a little concerned about.
Yeah.
All right.
Speaking of being married, my boyfriend Devin just opened up a custom shop in Bonita where he's building custom vehicles, which is really cool. Big trucks, Jeeps, high-end, high-performance vehicles.
Tell them the slogan.
Yeah, Level Up Customs, where innovation meets the road.
Lauren came up with that all by herself. But, what I also said it could have been, I told Lauren, I said, well, it could be roads where we're going. We don't need roads because
pretty cool.
It's right.
Yeah.
And we love that movie, but it's
Yes.
it's actually true for what he's doing. Guys, the shop is beautiful. Just stop in and say hi. Even if you don't have anything you want done there, just stop in and say hi and see what a great job they all did on this. And Lauren spearheaded that very well. So
thank you.
Kudos to you, Lauren.
Thank you. Back to these deductions, though. $6,000 if you're single, $12,000 if you're married. It's temporary, but it's significant. So
it is. And the thing that we always worry about, and I don't want to get on a soapbox about this, but now we've just delayed for at least another 4 years, and we're in this extremely low tax environment. What do we think is going to happen, right? It's only a matter of time. And right now, we added, with this bill alone, we added $3 trillion to the deficit.
Yeah.
Is that what it was?
And we're going to talk about that a little bit later. But what is our current deficit? What is it, 6 to 7 trillion a year?
It goes it could be 4 to 7 trillion,
Okay.
the deficit.
Okay.
It's somewhere in that range.
Yeah.
And the idea that we just have to, sit back and wait for this to happen. And you know what it's like, Lauren? It's like when we've got a lot of toddlers running around in the families here. It's like if we had, Scarlett, my little 3-year-old, right? If she was going to walk up the stairs and all of a sudden now she had to go from one stair to the next 5th or 6th stair. So that's what's going to happen. It's going to be a huge jump when this finally does hit the fan. It's going to be pretty hard if we would have had a slow build into this, like what would have been normal, then we probably wouldn't have to worry about it. But now this has become significant because when it finally does hit the fan, it's going to dramatically affect retirement lives, especially without any sort of a tax plan. We don't worry about it as much here because we know that we're actually preparing for the worst. We always have a written income plan, written tax planning, the estate planning's all done. So when all that ties together, we're not as concerned with what's going to happen later down the road, but it's still going to have a significant impact on families out there. I mean, we're one location, right? We're in Fort Myers,
right.
We're family owned, so it's hard for us to be able to help everybody, but it is going to significantly impact people, and especially in Florida where all the retirees are.
Yes. I know we wanted to talk about a little bit of like a strategic window for legacy planning, Adam, if you wanted to jump into that.
Yeah, the bottom line, Lauren, is it's real simple. This bill, the estate tax and gift exemption went to $15 million per person and $30 million per couple. Just to simplify that for you, if your estate goes above $30 million or $15 if you're an individual, anything that goes above that $30 million is 40% taxed. So it's really important, especially in today. We start to see that average estate value going up, especially with the baby boomers making that transition and then transitioning that wealth, which was like 64 trillion or something, some insane amount of money, that gets transferred back into society, right? So now I believe that this should really be high all the time, but in 2026, when all these tax cuts were set to expire, they were going to go back to 2016 rates, which meant that at $6 million if you were single or $12 million if you were a couple. Now imagine that, right, Lauren? So it's significant. I mean, if you go over that amount, that's a 40% tax. And even if you don't consider yourself wealthy, this kind of opens the door for lifetime gifting strategies, charitable trusts, or even family business succession planning. It's a chance to transfer wealth and then have more flexibility and less tax money for the IRS, basically. I think it's important.
Right. But remember, this doesn't mean do nothing. It means review your documents, evaluate whether your will or trust still matches your goals, which is one of our biggest biggest things here at Evolution, and have those conversations with your attorney and your advisor, ideally together, which is,
and of course,
what makes us special.
That is what makes us separate. It's, everything is done here. We have the team in place, and they've all been vetted. And of course, Lauren, no new law comes without trade-offs, and this one is expected to add over $3 trillion to the debt, like I was telling you earlier. To the deficit, I apologize. And while it doesn't impact your taxes today, it does raise questions about the future,
Yeah, that's right. I mean, historically, these large increases in the deficit have led to tax hikes, which we've already talked about, changes in entitlement programs like Medicare and Social Security, or reductions and deductions. I'll say that 5 times.
Reductions and deductions. I can't.
Okay. And we're not predicting here, people. We're preparing.
And preparation starts with building agility into your plan, building goals into your plan, and asking yourself, if taxes rise, are we going to be in this position to just pivot? Can you adjust your withdrawals? Will your legacy plan still work? This all starts to come to the surface. And what it comes down to is how flexible, how pliable is your plan? If it is so dialed in that you have backups on backups, that's great. But if you're just still in growth mode, we're in trouble right now. We have to start thinking about the ways that we're going to decumulate our wealth. Even though most of you out there, baby boomer generation, right? Known for saving and working. So most of you are still a little hesitant to spend, but maybe there's some experiences you can invest in with your family, etc.
Yeah. And now that, you guys know what's changing, let's talk about what you can do. This is not just about reacting to the new laws. It's about making smart and proactive moves like we just talked about, making sure that you have a plan in place.
That's right, because you need flexibility, especially in uncertain, policy environments like this. So here's a few recommendations that we can look at right now for families. The word clients, I hate the word clients. Roth conversions. If you're in a relatively low tax bracket today, that means that your taxes are at a discount. So you are paying the least amount of taxes you will pay if we believe that tax rates will go up. So you could avoid that by converting a portion of your traditional IRA into a Roth, which will eventually give you a tax-free income stream, which takes away from your adjusted gross income, which could put you back in parameters for only having 50% of your Social Security taxed or not paying as much for your Medicare Part B. So all important things coming just from that one item.
Right. And with Roth conversions, we always say you pay the taxes on the conversion now, but at lower rates. We're in a discounted tax environment. And you can avoid, your RMDs, your required minimum distributions later. It's especially powerful if you don't need all your income at the moment.
That's right. And Lauren, I think we should bring up probably tax efficient withdrawals too.
Yeah.
Why don't you jump on that? Just carrying over to what you just said.
Sure. Take a look at how you're drawing your income. Are you pulling too much from your IRA, pushing yourself into a higher tax bracket? And when I say withdrawing from your IRA, there's a specific way you can do this. If you're taking a certain amount from your IRA and a certain amount from your Social Security, you got to strategically plan that, because you could be paying much higher taxes if you're not taking the right amounts out. We talk about this in our workshop. Adam talks about this in the workshop all the time.
Oh, you're doing a great job talking about it.
Oh, well, thank you. But specifically, it's where you're pulling that money from. It can really put you into paying way higher taxes than if you have somebody helping you with that, and making sure that you're pulling that income and that money from somewhere that's going to put you in a more tax efficient.
Correct, because everything you pay in taxes is less that goes to your legacy, less that goes to your family that possibly didn't need to. So
Right.
Talking about updating your estate plan, that's probably one of the keys.
Yeah, definitely. And we were talking about, make sure you have your power of attorney, your beneficiary designation, make sure you have your health surrogate, your trust provisions.
Did you say durable power of attorney?
Durable power of attorney, yeah.
The healthcare directives are very, very important.
Yes.
I'd say that gets slept on quite a bit in retirement. It really shouldn't.
And just make sure that everything reflects what your current goals or your current wishes are, and take advantage of these new thresholds.
Yeah, the bottom line is nobody ever wants the IRS to get more money than their kids, right? Even if you don't want your kids to get everything and you do want to do a little bit of
Even
spending.
if you don't have kids, I think, you'd much rather have a charity, enjoy that money, and
Or a foundation
or
that
a
you could find.
foundation, even, if they're not your kids, somebody else's kids. I mean, nobody wants the IRS getting more and dipping into your pocket or double dipping into your pocket.
They've really been doing a good job of that lately, right? You take your RMD, you pay taxes on it, and then you reinvest it, and then you have to pay capital gains on it. So the way I always like to tell it is, when I was a kid, I was fascinated by the Revolutionary War. So that's almost like, I know the reason we signed the Bill of Rights was because we don't want to be double taxed. It's a big reason why there was a war. And now we're going right back to it again. You can't call it a double tax, right? They've done it specifically so that you can't. But I mean, what's really happening? You're paying taxes twice.
Yep.
It's just unbelievable.
Yeah. And I wanted to recap, Adam, because we wanted to break this one big, beautiful bill down for our retirees, our families here at Evolution, and just talk about what are the main things that we need to remember here for retirees.
I think the number one is going to be an advanced tax planning team, or somebody that can talk about strategies, because what it really comes down to there is we are once again in an extremely low tax environment, and that lets us be very complacent sometimes, right? But that does not mean that we're clear. We might be comfortable the taxes are lower, but that doesn't mean we're in control of them, right? The 4 C's, we always talk about that. We want to be in control, and we want clarity. That's what we really need. We don't want to be comfortable and complacent. So if you don't do this, it's a significant loss on your part.
Yes, and having somebody like a CPA that knows these new tax laws that are coming into effect, you have this advantage of that new 6 to 12, 6 if you're single, 12 if you're married, K deduction, the gifting limit of 15 million to 30 million if you're married, and the rising national debt means future policy shifts are very, very possible.
Of course it does. It's insane to think of anything else when it comes to that. That's why it's so important to have that advanced tax plan. And what's even more important, and we didn't talk much about this, but it's a direct result of being in a much lower tax environment. We have to have a specific income plan as well. That's going to help us determine what we're paying. And you already hit on it so beautifully. It's where the money comes from, right? Sometimes it's just taking too much out of one source and not enough out of another.
Yes.
I wish they wrote a book on this stuff. I'm sure they probably have, but
I'm sure that somebody will, right?
Here we go. That's
somebody in this room.
The slow plug, right?
May have written a second book.
I have. I am sending the final touches to the editor right now, and I don't know how long the process is now, but it's out of our hands.
It's pretty much we're looking at the first book hopefully being delivered to us in the next couple of months. I'm thinking
well, the concept
definitely
behind
before the end of the year.
The concept behind it was really about those 4 C's. It was. I titled the book "They Lied," right? Another "They Lied" series. What did we decide to go with the publisher? Are we still back and forth a little bit on that?
I mean, I think it's pretty set in stone, but
it's basically retirement isn't about growth, it's about control,
right?
And I think that might be what we ended up calling it, but that was the concept. You can grow your money, and you can continue to kind of live in a comfortable setting, right, or a complacent setting.
Yeah, and how it's a tug of war.
Yes,
between you, the IRS,
and your
taxes,
money.
Your money, estate planning. It's a tug of war. When you come into retirement, there are so many questions. It's a brand new chapter of your life. Yes, it's great, but planning for the weekend, your whole life, and then you really need to plan your week when you retire too. So every day's the weekend, right? You got to make sure that every day of retirement is spent doing something that you love doing.
Right, and
really
to me,
important.
that sounds exhausting. So maybe if you love taking a nap once in a while, that's what you should be doing.
Whatever that is. Yeah. There's no right or wrong, right? You're retired. Right. You earned it.
Right.
So,
but this book should be a very valuable and easy read. That was what was so hard about the difference between writing this book and the last one. Sometimes I felt like I lost my voice a little bit to be able to tell this from this 30,000-foot view of what a person is reading about, like an RMD. I could use the term RMD, but somebody has to know it stands for required minimum distribution, right? So that was a little bit difficult for me. The first book was just so easy to read. I was full of ideas. This book, I didn't want it to read like stereo instructions or like a technical manual or put it. So what I did, just to break it up a little bit, was at the end of each section, I had specific questions that everybody can answer for themselves and see where they're at. And that was important to me. I wanted it to feel like a little bit like a workbook too, but I really wanted it to just be, kind of the epitome of what we've found as we come up on 10 years of business.
Interactive. Almost interactive too. It's got that nice touch.
It does. And the cover feels really neat too from the material they sent us.
It's like matte. A matte. Yeah. It's nice. It's much different than the first book.
It is much different. I was not allowed to use, I had a very comic book feel to the first book.
Yes.
Like I wanted to portray this cartoonish look, but also it's very real because people like the IRS are clowns sometimes. So I wanted to be more of a caricature. This time I wasn't allowed to do that. Lauren and Amber, my work wives, and then Kelly, my home wife, all put their foots down and said, no, we're not doing that. So, so it was a little bit of a transition. That's why it's taken a little bit longer.
Yeah.
So I blame Lauren and Amber and my wife.
That's fine.
So
whatever. Moving on. I want to talk about some upcoming events we have here at Evolution. We have our September 10th Lunch and Learn coming up with Brian Barrett. He is a Medicare specialist. And with open enrollment coming up, and if you're turning 65, extremely important that you attend this. Even if you're not turning 65, if you have questions, there's a million questions about Medicare.
Yeah, and
Advantage.
It's important. Supplements, Advantage.
Anything,
But the big thing is that it is something that you're going to get phone calls and phone calls about.
Yes.
It's always very confusing. So you're going to leave that room being very clear on exactly what it is, how it works, and what might be best for you. So that being said, I know that we've had a lot of interest in this event. So
yes, definitely. And then also it is filling up quick, so make sure you RSVP. We have Adam and Kurt are doing college classes for retirees at FSW, Florida Southwestern State College, over here off of College Parkway in Fort Myers. Pretty awesome. It's a 2-day event. So classes are going to start on the 22nd. So if you start on the 22nd, you'll also have a class the next week on the 29th.
Yeah.
That class will be at 9:30. It's a 2-hour class. And then after, if you want to do a later class, we have this July 24th and July 31st. That's the other 2-day class. And that starts at 1 o'clock and ends at 3 o'clock. Lot of great stuff in this workshop. It's a 2-hour course.
It's really hard
we
with that,
get in
by
the
way.
Weeds.
2-hour course was hard to prepare for.
It's tough. It's a lot of material, but it's really, I think it's a game changer a little bit.
It is.
From our normal workshops, which are normally 45 minutes. It's hard to get all that information and questions answered and, make sure people,
and kudos, really big kudos to the content creators for the course, because it was not something that was, it was not something that was boring or something. It just needed to be spiced up a little bit so that we could make sure that everybody kind of could relate to the material. But I thought it was very, very well done as it can be, with the technical aspects and finding a way to bridge the gap and communicate that to families. So I thought it was good. I'm excited about it. I've always wanted to teach a college course.
Well, I mean, you're naturally an educator, I feel. Your degree.
Master's degree in secondary education.
And
it looks great on my wall, Lauren.
I know it does.
I have 2 other degrees, too.
I do.
Are we afraid to talk about those? Theater and English literature were my 2 other degrees. And then I did my master's degree in secondary education.
Jack of all trades here, people.
I love theater. It was great.
Yeah,
Actually, I love the stunt work. I didn't necessarily.
I was going to say,
Yeah, the stunt work was my favorite. Yeah, for sure.
Well, thank you, everyone. I do want to also give I don't know, did we already give a shout out to Val and Cece for the baby shower?
Oh, we did. That was on the last one. Yeah. So Kurt had a baby shower here. And we've got amazing clients that all wanted to throw him a baby shower, even though he did want one, and they wouldn't take no for an answer. And as Lauren was saying, there's a few people to thank.
Val and Selenia, thank you so much for everything that you did. Valerie, thank you for opening your home to Amber and I. And thank you all who attended. Your presence and everything, it just made, I know it made all of our days.
I felt like just the energy, because we're so used to serving, and that's what we want, and all of a sudden our families come in and serve us. It was just amazing. I think just that energy made us feel really proud of what we do and the relationships that we've been building. I was
going to say, we're already family. It just feels, everyone here that we work with, I feel like you are an extension of my family. I could call any of you and have a full-blown conversation about anything or nothing, you know, and I really appreciate that about everybody.
Because I never
here.
answer when you call, so that makes sense.
Oh,
that makes perfect
Adam.
sense. You almost called me Amber. I heard that. You almost said Amber.
I know.
So interestingly enough, I had one other thing that I wanted to cover with that. We were talking about, oh shoot, Lauren, I'm having a senior moment. We were talking about the baby shower. The best part of the baby shower was Kurt being put in the middle of the room on a chair and having to open all the presents. I've never seen him so red before.
So out of his element.
Out of his element. He was very red though.
Kurt doesn't like the attention.
Kurt hates attention.
Yes.
Yeah. He loves all of us, thank God, because, you know, he's just so high functioning that sometimes he just can't remember what a joke's supposed to be. You remember when he tries to tell us a joke and he keeps a straight face?
Adam.
Oh, gosh.
All right. Well, we're going to cut it off here, people. If you guys want to subscribe, like, email us, call us, do all those things. 239-771-8696.
Taxfreefortmyers.com. All spelled out.
EvolutionRetirementServices.com.
Yep.
Email us. Anybody that works here, Adam, Lauren, Kurt, Melissa, Brett, Amber, at evoretire.com.
Yay! No, it sounded like you were building up to that. Sorry. Before we go, though, I do want to just send out a heartfelt thank you for all the emails, all the love that we received from the podcast. Also wanted to apologize to those of you who are waiting for another episode, and we're trying to get back on track with this, so we do it every 2 weeks. So obviously, I just want to apologize, but tell you also how much we appreciate you, and we appreciate not just our listeners, because most of you are our family, so we appreciate our family. And if you want to know what that feels like, you know how to reach us. If you have any questions, you know how to reach us. So it's on you now. The ball is in your court. And with that, goodbye, everybody. Lauren?
Bye-bye.
Bye-bye. Welcome back to the Retirement Evolved podcast with Adam, and as always, can't do it without her, Lauren Trolson.
Hello, and welcome back, people. This is a great day.
Well, I guess so. You know, what happened, folks, just so we can let you know where we're coming from here. We already recorded a podcast, this very podcast, but someone forgot to put the chip inside the machine. So that's how our Friday's going today. So all kidding aside, we got a couple important things that we want to talk about today, right, Lauren?
Yes, we do, Adam. Today we're going to unpack some big tax changes that we've seen. Congress just passed what's being called the One Big Beautiful Bill Act. But before we get in...
I can't.
Investment advisory services are offered through Evolution Wealth Management Incorporated, an investment advisor registered with the state of Florida. Registration does not imply any level of skill or training. Evolution Wealth Management's unique CRD number is 307644. You can obtain a copy of Evolution Wealth Management's firm brochure, Form ADV Part 2A, free of charge by visiting advisorinfo.sec.gov. Evolution Wealth Management offers investment advisory services only, where it is appropriately registered or exempt from registration, and only after clients have entered into an investment advisory agreement confirming the terms of engagement and have been provided a copy of the firm's ADV Part 2A. Insurance services are provided by Evolution Retirement Services. Any guarantees mentioned are backed by the financial strength and claims paying ability of the issuing insurance company and may be subject to restrictions, limitations, or early withdrawal fees, which vary by the issuer. They do not refer in any way to securities or investment advisory products. You should consider the charges, risks, expense, and investment objectives carefully before entering a contract. This material has been prepared for informational purposes only and should not be construed as a solicitation to affect or attempt to affect either transactions in securities or the rendering of personalized investment advice. This material is not intended to provide and should not be relied on for tax, legal, accounting, or other financial advice. Evolution Wealth Management and Evolution Retirement Services do not provide tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Evolution Wealth Management and Evolution Retirement Services are affiliated entities. Investment advisory services are offered through Evolution Wealth Management Incorporated, an investment advisor registered with the state of Florida. Registration does not imply any level of skill or training. Evolution Wealth Management's unique CRD number is 307644. You can obtain a copy of Evolution Wealth Management's firm brochure, Form ADV Part 2A, free of charge by visiting advisorinfo.sec.gov. Evolution Wealth Management offers investment advisory services only, where it is appropriately registered or exempt from registration, and only after clients have entered into an investment advisory agreement agreement confirming the terms of engagement and have been provided a copy of the firm's ADV Part 2A. Insurance services are provided by Evolution Retirement Services. Any guarantees mentioned are backed by the financial strength and claims paying ability of the issuing insurance company and may be subject to restrictions, limitations, or early withdrawal fees, which vary by the issuer. They do not refer in any way to securities or investment advisory products. You should consider the charges, risks, expense, and investment objectives carefully before entering a contract. This material has been prepared for informational purposes only and should not be construed as a solicitation to effect or attempt to effect either transactions in securities or the rendering of personalized investment advice. This material is not intended to provide and should not be relied on for tax, legal, accounting, or other financial advice. Evolution Wealth Management and Evolution Retirement Services do not provide tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Evolution Wealth Management and Evolution Retirement Services are affiliated entities.